The break and retest strategy, it's a pretty simple but effective way to take advantage of market movements, and I think it can give you an edge as a trader. But it's important to note that this strategy does require a bit of knowledge about how these types of trades work. So we're going to dive into this. So the break and retest strategy, it involves identifying a price level that's been tested a few times, and then you wait for a price to break through that level before entering a trade. Now, this strategy can be used on any time frame, but it's most commonly employed on daily or weekly charts. And the key to this method is to find an area of support or resistance where prices have repeatedly failed to move beyond. And when this happens, it indicates that there are buyers or sellers who are willing to defend that position. That creates an opportunity for traders to enter a trade in the overall trend direction. So let's look at this stock chart here. It's called Harrow Health, HROW. And over the last few months, you may have noticed that every time it reached a new resistance level of about $13 per share, it was met with selling pressure. So after several attempts at breaking through this level, it actually succeeded in December to January of 2023. By recognizing this pattern early enough, traders with an eye for detail could have taken advantage of the break and the retest setup by entering a long trade. Once this stock surpassed $13 to $15 per share, and you place a tight stop loss just below the prior resistance zone or deeper into the range, you got to do something like that, okay? Because it's really essential that you limit potential losses should price decide to reverse back. These patterns, I think they're a really useful tool for traders to identify potential trading opportunities, and we're going to discuss how to identify these. And identifying these, it's an important skill. By recognizing these levels of support or resistance early enough, traders can take advantage of potential price reversals and enter into profitable trades, hopefully profitable trades, of course. So we're looking for instruments that have made a strong move in the recent past, and it's now consolidating. This is one of the best ways to find these setups. Moving averages, they can also be useful when you're looking for these levels, since they do provide an average price over time, and that can be used as a reference point when you're looking at chart patterns. And finally, just using a simple trend line can provide zones of opportunity for traders to look to trade the break and retest method. So you're going to look for large price moves and then a consolidation. Now, retests and pullbacks, they're similar, but they're different. So a retest is going to occur when the price of an asset reaches a new higher low, but then quickly reverses back to test the previous level. Pullback is when price moves in the opposite direction from its original trend. The setup's totally different. So this type of movement can be seen as a confirmation that the breakout was valid and not just a one-time event. A retest can provide you with opportunities to enter positions at better prices than if you enter just before the breakout or at the breakout. Just depends on how that breakout happens. Now, breakouts in the opposite direction, that can also be the beginning of a new trend, and it's really something that you might want to consider if that current direction is showing some exhaustion pattern. Now, pullbacks, they offer you the opportunity to enter positions, of course, but they do come with a higher degree of risk because pullbacks are often diagonal, and that can make it difficult to find an acceptable stop loss zone. These can also take the shape of different price patterns that take place after a strong move in price as well. So don't look for the perfect looking pattern. It's just the concepts that you have to understand. So when a large price move comes in, traders jump into trades, right? They fuel that drive up. As price drives up, those that were in early, they start taking profits. So eventually what happens, price reverses because that drive begins to stall because there's selling taking place and more traders look to get out. But pullback traders will look to trade that reversal after that selling to get back into the move. When you trade breakouts, it's really important to understand both retests and pullbacks in order to identify the opportunity for entering positions at better prices. Okay, they're two different setups. Risk, it's got to be managed appropriately, and you got to set your stop loss close enough so that sudden reversals don't cause a large loss, but they're still far enough away to allow for the normal day-to-day fluctuations and volatility of the instrument that you're trading. So again, it's a popular strategy. A lot of traders use it. And you could also include other indicators like a moving average or an oscillator like the RSI, along with trend lines and chart patterns. Triangles and flags are my favorites. That can help identify potential breakouts and retests a little bit more accurately. So in this example here, we have a large move up. It was a 179% move. That's large. And then price starts to make higher lows under resistance. That's really important because there's buying at higher prices. And then we have a break and a retest of the resistance zone. It's really important for traders that use this strategy to practice risk management techniques like setting stop losses at sensible levels because you do not want to get caught up in a runaway move against you. I think it's a powerful tool for traders to actually get you into a trending market. But when you trade the breakout also, you got to understand that there's going to be failures of that breakout, and you got to be able to identify that. So one way is by looking at volume levels after the breakout period, because if volume fails to pick up significantly after breaking out from a previous range, chances are pretty high that it could retrace back into the prior range soon after breaking out, right? So it's a failed breakout. No one's interested in it. Now, in this example here, the trade eventually does move up after price plays around that area, and we don't want to see that. We don't want to see a breakout and price just flipping back and forth around that area. There's no increase of volume after the break. There's no strong move away from the zone. And the biggest fault with this one is the momentum that propelled that break came from the low of the area. A lot of buying pushed that up. So look for consolidations near resistance if you're looking long, as well as higher lows when looking for a break and retest. So if you can identify a false breakout in the market, well, then it's important that you manage your risk and position size that trade accordingly, because it is kind of counter trend trading. Now, if you want to trade a failure, you want to see a true reversal candlestick that takes place away from the breakout zone. We'll cover that in a later video. So when you trade breakouts, risk management is key. A stop loss order, you got to use it because breakouts fail. Trailing stops are another tool for managing risk with break and retest because it allows you to lock in profits while you allow your positions to remain open if that trend continues. Position sizing, it's pretty important again because these are pretty risky. So you could consider using smaller position sizes so that any potential losses don't really impact your overall portfolio. For example, instead of risking 10%, which I hope no one is, you could opt for 2 to 3% and spread it across multiple trades. In fact, you could look at expecting the breakout to fail and use even 0.5%, knowing that if it does go, you'll add into it. So it's important to remember there's no guarantee that any breakout is going to be successful, okay? You got to exercise caution when you enter into these trades. So I think this is a great way to take advantage of market movements when you're day trading or swing trading. It doesn't matter. When you understand the definition of a break and retest, the concept of it, how to identify the opportunities, the difference between a retest and a pullback, and also having an effective strategy in place, you can increase your chances of success when you trade stocks or any other thing out there. We talk about indicators. There's a lot of overused indicators and people use them all the wrong way. We have an ultimate guide to price pattern trading. It's totally free. It could help you find ideal entry points with lower risk. It's a free guide. Link is down below or to the left. Hope you